Okay, so quick update on the wider markets for the YouTube side of things. So we'll start off with the US dollar. So really the story of the year has been the US dollar. It's continued to strengthen from 88. Now I did call 88 in a video I did. You can find it on my YouTube channel way back in October, to say the dollar would hit 88, then move up to 3 digits, then have a 30% devaluation. And that is exactly what's happening here. I like to take a more of a wider term look and zoom out. I mean, that's how you make money in the markets. You need to understand how to zoom out. Now, the US dollar has put a lot of pressure on EM, and next year it'll put a lot of pressure on Europe, specifically the smaller peripheral nations around the European Union. Obviously, alongside that, we're going to have a Brexit issue to deal with, and that's going to bring some economic uncertainty. So the US dollar isn't done, and we need to respect its movement. Now, just to highlight the effect that the US dollar has, because it seems to be lost on some people, I'm going to convert the US dollar to a line chart, and Bitstamp is now in red. So as we can see here, Bitcoin wasn't really doing much as the US dollar was quite strong. Suddenly the dollar goes from 102 to 88, and Bitcoin at the same time has gone from 3,000 all the way up to 20,000. The point being, since 88, the dollar getting stronger, Bitcoin has now moved down, and I can show that very similarly also on gold and silver to a certain extent. So the US dollar affects everything really, from crypto, stocks, indices, fixed income, and Forex fluctuation. So we have to respect its move. Suffice to say, I don't think the dollar is done in its move, and I still maintain my more bearish count on Bitcoin to go to 3K or less. Now let's go into the dollar. So the dollar, the long-term count is that we are going to go into 3 digits, if not before the end of the year, very much soon after. So by February, I do expect more than 100 on the US dollar. Now there's a couple of counts. There's no need to go too much into this, but we appear to have bounced quite strongly off 93. So if that maintains itself, it's a very shallow wave too, and we're now going to go into quite an impulsive leg here. Either it's an A, B, C to get us up to 111, 112, or it's a 1, 2, 3, 4, 5. Either way, the dollar is going to be the trade once again moving forward. It's not done yet. So yeah, 1, 2, 3, 4, 5, or that's an A, that's a very, very shallow B, or then we go up. If we make some kind of fancy flat pattern here, and then it catches, then it comes back down again, and it maintains it, we could double bottom here. But either way, long dollar is the trade, and has been the trade all year, and that's not going to stop. And we are definitely going to challenge these highs in 2019, 100%, and I think we're going to take off this high off 103. I think we're going to go even higher. There's not enough pain yet. EM's got affected this year, but next year it's going to be Europe. The entire narrative will change to Europe. I mean, the number of fractals we have that's comparing this market right now to 1920s and 30s is unbelievable. And we know what happened at the end of 1930s, and that didn't really end well, did it? So it'll be interesting if we get something similar this time. Okay, and we'll cover the Dow shortly. So the euro, like I said, it's going to go down. Every trade here should be a short trade. The trend is down 100%. We're going to get a challenge of 1.03 at some point next year. My target is actually 1.00, so basically parity. So I feel we could see parity in the euro dollar next year, full stop. Certainly my Elliott wave count does suggest that. And like I said, Portugal, Italy, Spain are going to have some real issues. UK is going to be relatively fine, but I do still expect cable to move a little bit lower too. So like I said, I'm not a big Forex guy. I don't day trade Forex. I look at Forex more on a longer term time horizon, so months up to years in fact, so you can take advantage of these big swings, like from here to here. You know, that's a massive move in Forex there, so you can take advantage of that and know which currency to be best based in. And obviously right now it's best to be in dollars. Cable, yeah, so cable, I'm still expecting a movement down. I expect a challenge of these lows here, possibly it doesn't have to happen. Cable will still go up to 1.60 eventually, but with the Brexit uncertainty, I am still expecting more movement down in cable. So a retest of 1.26 and then a movement down into this sort of area. I've got 110 as my target. Cable's not really selling off as bad as euro, but for me, the next 6 months, I mean, we're in October now, so Brexit's March. So we got another 6 months there where I think still cable could go to retest these sort of areas, 120. Whether it'll retest 116, 110 remains to be seen. But for me, because you could count that as an impulsive wave, doesn't look very good, does it? But you can just about count that as a leading diagonal wave 1, in which case that's all a wave 2. But still, Elliott wave aside, I am expecting some movement down. And then following Brexit, that'll be a good time for people who are holding dollars to convert into cable, because the long-term count is going to be 160. So watching cable, very, very interestingly, this currency has been hammered since basically 2008. So that entire pattern needs to sort of end. So if we say the end was sort of here, you can easily see a movement to 1.60 eventually. So cable is going to be back, but not just yet. It will take another 6 months or so. Okay, let's go on to the bond market. So the bond yields 10s over 2s. I'm expecting the 10-year to start rolling over here. It's at 3.19. I've got a target of about 3.3, 3.4. Money's going to go into bonds as this market has its 20% sell-off, and that'll bring these 32 basis points a lot closer to inversion. So if I just bring up the regular, yeah, so I'm expecting a little bit of a movement up. Like I said, as we get movement back into bonds before Christmas, we're gonna see that 10-year yield moving down, because the price of a bond is inversely proportional to its yield. So that 32 is very quickly gonna start becoming 17 and then going into single digits. And early 2019, certainly looking at the last 2 times, I'm expecting early next year for that to be inversion, and then you just count the clock. You count 18 months from then on average, and then we get quite interesting times in the stock market. So make sure you're watching that yield. Sorry, make sure you're watching the yield curve, not the yield per se, the yield curve. And finally, the Nasdaq. So let's cover the Dow. So because of that yield curve inversion, banks obviously have to invert what they're doing. So now they can't borrow short, lend long. They have to basically do the opposite. Yeah, so they have to borrow on the long end and then lend out short-term high-risk investments at a higher interest rate, and that's obviously very speculative. Now the Dow Jones, if I just take, may as well just take everything off here because it is a bit of a mess. Damn, can I reverse that? Don't think I can. Oh, I can. Okay, perfect. So yeah, I don't want to take that off because it's got my target. So if I just put up the regular, is this the regular? Yeah, so this is the regular chart. Yeah, so there's one more vertical move here. I don't think we're done in stocks, certainly not US stocks. I mean, I wouldn't really be playing any other market other than US right now. I don't think we're done yet in this market. I still think there's one more push higher. So, that'll all be a 1, a 2. This has all been a massive wave 3 to probably here. Now we're in the process of forming this expanded flat where the Dow is going to move down to at least 23,000. I've got it going potentially as low as 20,000. And then we have this final blow-off vertical top. This market is not ready to sell off right now. If you have a look at the economic data, inflation, wage inflation, price of oil, PMI data, unemployment rate, we're not quite at recessionary levels. We are getting close, but I would concur with Ray Dalio, who says we're about 2 years away. That certainly ties in with my Elliott wave count. Now, once that yield curve inverts in January, February time, then we're going to get a very interesting time whereby emerging markets will have a very difficult time. Europe will, and whilst the US stock market will look very rosy. And then we're going to have the most ridiculous move of all time, where the Dow will make its final wave 5, which will be vertical. Now these blow off tops, they don't happen at a gradient of 45 degrees, 20 degrees. They happen quite acute in terms of their movement. So the point being, I don't expect it to take up much time in terms of the x-axis. It's going to move pretty fast and pretty vertical, where everyone, banks mainly, are chasing rising asset prices. So technically the banks are insolvent at that time. The only reason that they're not is because they're chasing these rising asset prices. Point being, therefore, once we get a slowdown, that's when things start to get very bad very quickly. And I'm convinced that at one point in the next 3 years, I'm going to wake up to a Dow down 5,000 points in one day. I'm convinced of that point. I'm not going to ever think otherwise. I mean, we had a 1,000-point drop here in January, but up here at 40,000, I'm convinced at one point in the next 3 years, I'm going to wake up to a Dow down 5,000 in one day. That'll obviously be the biggest short of all time. Now, just to also bring back the fractal nature of 1920, it's very, very interesting what we're doing right now. So if we go back to the good old days, well before any of us were born, there's so many interesting fractals here. So we saw it here as well. So you could argue we're in sort of a 1927, 28 where we're going to get this blow off top, which only lasted 18 months. Then we got a massive 90% takedown, which took out the previous lows, so i.e. the 2008 lows. So I think Dow will go 20k, 40k, then 2k, and then we get this overlappy sort of nature. And then obviously end of the 1930s with a massive geopolitical crisis, which we all know how that turned out. So yeah, it's going to be interesting whether we play an exact fractal nature of this. Certainly Elliott wave is very predictable in its in its nature. That's why I use it. You can't predict things by using moving averages or Ichimoku, Boku clouds, price action. You can only, if you're not proficient with Elliott wave and fibs, you can't project anything at all. So have a look at my Shopify store if you guys are interested. Now the problem with this Dow count is that we're gonna basically finish simultaneous degrees of trend all at the same time. So that's why it's such a big issue, and that's why many people are warning of this. So that is the major count. So basically, just to make it clear, we're going to finish a primary wave 5, and that'll be a cycle wave 5 from here, and that'll be a super cycle wave 5 since 1929. So it's 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, and now 1, 2, 3, 4, 5. So we're going to complete a primary wave 5 of a cycle wave 5 of a super cycle wave 5, and technically, if you really want to break it down, it's a complete grand super cycle number 1 since 1792 when the Dow was first invented. So that's not happened before in human history. So we are completing at least 3 degrees of trend simultaneously, and there's an argument, as far as I'm concerned, we're going to complete 1 grand super cycle, which hasn't happened before in human history. So after 5 waves, we get a requisite 3-wave correction, but we're correcting definitely an 80-year bull market, and as far as I'm concerned, a 230-year bull market. So make of that what you will. We know after a blow off top, we typically get an ABC zigzag, which will basically go to the previous wave 4. So I see no reason why the Dow can't go 20k, 40k, 2k. This would be the previous wave 4. So I don't see any reason why that can't happen. Elliott wave doesn't lie. So and like I said, if it plays out like this, it's going to be very, very interesting. But certainly, the 1920s and 30s shaped the rest of the 20th century in many ways. And I feel as though what's going to happen in the next 3 to 5 years are going to shape the rest of the 21st century. So that's my take. Anyway, that's the long-term count, so I just thought I'd do an update on that because you know, that's just to make sure it's clear. But once again, I've had these counts for longer than a year, so you can predict everything well ahead of time. So get to my Shopify store if you're interested. Okay, and short term, yes, we got a bit of a catch yesterday, so we could still push higher here on the Dow. It's very, very toppy. It's very, very risky. You could argue all of that was just an expanded flat pattern. I do have some higher targets here, but it's already gone past 2 of them. Highest target I have is 27.3, but honestly, the only trades to be looked at here are short trades. So any movement up here, you should be looking for shorting patterns. So wedges, head and shoulders, double tops. It could just double top here, it could go a little bit higher. Either way, everyone's looking for that short. But they will short squeeze everyone before it properly rolls over. So just be careful with that. But if we have a look at the idealized Elliott wave, just to make it clear, wave 4s are typically profit waves. Okay, so this is the idealized structure. So that's the change in trend. That's the panic wave 2 that doesn't make new lows, and this is wave 3 is typically the highest volume, the most vertical, the fastest move with the best fundamentals. So this was basically from 2011 in the Dow to 2015-16, that was wave 3 or 3, and you could argue up until last year that was the best fundamentals. Wave 4 is a profit taking wave, so the large institutions have been selling out of their holdings for basically a year. And if you look at it objectively, since January we're only up about 200 points on the Dow since January. So that is clearly showing we're in a wave 4, and that's massive profit taking. So they know what's coming, and they've been offloading everything for a year. That's why all the big days in the Dow over the last 10 months have been down days, because that's when the big professionals are dumping onto the open market. And I can give you at least 20 examples here where the Dow has dropped more than 250 points in a single day, and these are all just large dump days by the large institutions. And obviously we're not done yet. This wave forward is still gonna come down to at least, you know, 23,000, maybe 20,000, and then we're gonna have this wave 5. So from a psychological perspective, this is the best fundamentals, this is the profit taking wave, and this is the final speculative Ponzi, everyone trying to jump on, chase these rising asset prices, as we saw with Bitcoin. That's what the wave 5 is. So it's not to say that you can't make money. Of course you can, because if you bought Bitcoin at 3k, sold at 20k, you would have made 6x in the space of 3 months. But I'm just explaining what the psychology is. So the professionals have actually sold out a large part of their holdings here. Then we have typically a very low volume speculative rally, and that is basically what a wave 5 is. And then in the end, that extended wave 5 ends up in a massive ABC correction. And that's what we're going to go into, because the yield curve will invert by January, February. So it's going to be interesting to see how this plays out. So definitely a lot of money to be made in that move up, but just understand that actually that move up is not going to last, and it's not going to end well after that. Okay, so that's the Dow short term, medium term, long term. VIX is, you know, it's Ruts obviously selling off. I'm not going to go into that. And the Nasdaq very quickly. So you know, this is just if you find a market that works well, just stick to the market. To me, the Nasdaq has already topped out. I've been warning of this for quite some time. I mean, obviously I follow it a little bit more closer than most people, because it's you know, it's just free money. So you know, it's a 1, 2, that's probably a 3, that's probably the 5. So I think they're going to short squeeze a lot of people out of their Nasdaq shorts here, but in the end, any short squeeze is to be shorted. I don't think you're going to see 7684. To me, that's all a wave 1. It's not going to make some sort of ABC. Maybe we'll retest 7500 or so, maybe a little bit higher, and then that'll be a good time to reload in the short. before you get that big move down again. So it would make sense for Nasdaq to be selling off because it's high beta, high growth. So that's why very well-timed news with Google. Yeah. Does news move the markets, or is it the fact that people are selling out of their Google holdings? So still think the news effect is lost on some people, but there you go. Okay, so I'll wrap it up there. So yeah, just follow me on Twitter. Have a look at my Shopify store if you want to know how to have a look at the markets. You can join the group if you like. We go through everything, group requests, crypto, bond market, dollar. So obviously we go in more detail whereby I can give targets and whatnot. So I'll leave it up to you guys. Good luck with whatever you're doing. Those are my Shopify videos. I will have some more videos coming up in the near future. Hopefully get some webinars done at some point, maybe towards the end of the year, maybe next year. I'm not sure as of this moment. Anyway, be careful whatever you're doing. We're getting into very tricky times, and like I said, the US dollar is to be respected. There will come a day when the US dollar will go down, but we're not quite there yet, and it's going to put pressure on a lot of assets now, and watch that bond curve. Okay, I'll chat to you guys later.